With more on what we might expect from stock markets in the second quarter is Isaac Cohen. He's the president and CEO of Inverway LLC, a business development company right here in Washington, D.C. Good to see you, Isaac.
Thank you.
Now, given where we were in December with the U.S. stock markets, how surprising is it to see now, seeing the best quarterly results in a decade?
Yes, it was a good quarter, but it had ups and downs. Actually, the fall in December was very, very deep. It picked up in January and February, but in March it came down again. So what's been happening is that the markets are really haven't been able to move beyond the records that they had reached in 2018, where the economy was stimulated by the tax reductions. So we are very expectant, what the reaction will be in the next quarter.
Now, let's look at the headwinds in the economy that are presenting themselves. We have, obviously, the Fed saying no more interest rate hikes this year. Employment figures seem to be slowing, obviously, global trade frictions, and also a global economic slowdown. So with these factors, then, how sustainable is what we're currently seeing with the markets?
Well, the projection is that for this year is that we'll have a slowdown. The White House has said that they hope to attain 3% growth still this year again. But the assumption there is that they're going to have another tax rebate and perhaps an big investment package on infrastructure. But with the Congress now, the House of Representatives in the hand of the opposition, I don't think that's doable at this point. So the expectation in the Federal Reserve and private economies as well is that we are going to have a slowdown.
Now, some experts say that U.S. markets have become a little bit too complacent when it comes to factoring in some of these headwinds. What are your thoughts?
Well, some of the figures have been supportive of the market. For instance, the unemployment figures, low inflation, the fact that the Federal Reserve now has said that it's going to be patient, that helps. But as I said, the markets do not seem to have the strength to move beyond the records.
Okay, so let's also look at what's happening with some of the bellwether stocks that tend to reflect the trends in the economy. What are the standouts for you, and what are your expectations for them this year?
Well, the basics are good in the sense that, for instance, all energy stocks are fairly good, less dependent on those kinds of headwinds. But I would say that the stock market needs at least the promise from the part of the Federal Reserve that there will be more interest rate increases during the year. Because otherwise it's going to be spooked again and we're going to have a fall as deep as the one we had in December or the one we had in March, despite the fact that there were positive numbers in the economy.
Now, the environment certainly isn't stopping the IPO market so far this year in 2019. Who are some of the big headliners that we should watch, not just in terms of beating expectations, but who's also disappointed a bit so far?
Well, the big one was, of course, Lyft, which started the year. Hopefully, Uber will come in. There will be several others, but those are like flare-ups. We saw Lyft going up impressively at the beginning, and then it's been going down. There is a lot of skepticism in the market still, and the skepticism is about perhaps the main, as the deputy director, managing director of the IMF said, the biggest sort of tension for the market right now is the China-US trade talks. The outcome of that is going to be decisive, to give the market a push in optimism if we have a positive outcome.
Now, as we mentioned Lyft, we also know that Uber's getting a lot of buzz, clearly Lyft beating them to the punch with its IPO filing. But what are the expectations there? Will it meet the hype, considering how things have gone with Lyft's IPO?
Yes, I guess so. Uber is built bigger than Lyft. I mean, it's going to be a bigger operation, and the expectation is that will be positive as well. The thing is, as I said, some of the sources of tension in the global economy have to be eliminated in order for the markets to develop gradually and sustainably.
So then, outside of the US markets, which other markets should we be keeping an eye on?
Well, Europe, of course, is very, very slowing down considerably. Japan as well. And emerging markets have been surprisingly resilient as a result of the ups and downs in the US markets. But I wonder how that resiliency will operate. The price of oil is still determinant on the emerging market side. It's going up. It's being up over $60 a barrel right now. So we're going to watch the price of oil very, very closely.
So some cautious optimism there. Always good to have you on. Isaac Cohen there, President and CEO of Inverway LLC.